You're watching Navigate Your Wealth, brought to you by the team of Compass Financial. I'm your host, Kristin Oakley, here with both Karen Stawicki and Samantha Irish. We are talking today about the greatest trick that's ever been played on your retirement, the subject of taxes. And one of the things we definitely need to talk about on today's show, because I've heard this a lot, I know you hear it a lot as well, I'm sure this is a conversation going through our viewers' minds. There's a big debate out there over whether it's better to go ahead and pay tax now or wait and pay tax later. Let's get into that, and I really want to hear your take on this important debate.
As I stated in the first segment, when I first got in this business, tax rates were so high, it just seemed like a no-brainer that you should take the advantage and not pay the taxes then, because you would be in a lower tax bracket when you retire. But as I also mentioned, taxes really are at the lowest levels we've ever seen. And so the question you just asked really rolls out to, should you pay on the seed or should you pay on the harvest? I mean, think about that. Should I pay on the $10,000 contribution now, or should I pay on the $100,000 that it will grow to? Again, we told everybody, it's not your fault. As advisors, we said you're going to be in a lower tax bracket when you retire. The problem is, I want you to pull out your retirement account, and I want you to look and see what the balance is. And then I want you to hold your breath for just a minute and realize that's not all yours. That is a joint account with the IRS. And so at Compass Financial, one of the things that we want to do is find a way to put you in the winner's seat. The government is giving you all of these advantages. I'm pretty sure they're doing so because they're trying to win this game, right? I mean, when was the last time they gave you an advantage that allowed you to win the game?
Right.
So it's really important for us to understand this whole pay now, pay later, and how do we do it? We believe that you should do a little of both.
And so this is where it gets interesting, because I know a lot of folks are familiar with, working with their CPAs, doing tax preparation, where you're looking behind at what happened last year, how to pay the least amount of tax possible right now. So what would you say to the CPAs of the world who are saying, well, but if you don't get the tax deduction now, you're leaving all these deductions on the table. How do you combat that argument?
Listen, your CPA is not lying to you. If you choose to pay the tax today, you left a deduction on the table. But at Compass Financial, we say that it's not about what you pay in taxes in 1 year, it's what you pay over your lifetime. Your CPA's job is on an annual basis to do the right thing for you. Our job is over your lifetime, and especially over your retirement, to do what's best for you. We've got to have the most spendable income in retirement that you can have. Remember that when you are working, you work Monday through Friday, and you probably have most of your fun and spend most of your income on Saturday and Sunday. When you're retired, every day is Saturday and Sunday. You did not work all of those years so that you can sit home 5 days a week and do something 2 days a week because you didn't plan properly, and now taxes have removed the ability to be successful. When we talk about what you've paid over your lifetime, we do a tax burden analysis for our clients. And when you come in and meet with us, that tax burden analysis is part of your retirement roadmap. In the tax burden analysis, we can show that by ripping the Band-Aid off and paying the taxes now, you could actually pay 3 to 4 times less tax than if you do it the traditional RMD way.
This is really powerful, and I know you all have put together a chart that illustrates this point, and we want to share it with all of you now. So walk us through what we're looking at here.
So in this example, Kristin, this individual has $1.5 million in their qualified account. In the scenario on the left, where they choose to keep the qualified account and only do the government's way of removing the assets via the required minimum distribution, they're letting it grow until that 73, 74, 75 age. And as they start to take it out, you can see the first number, $739,066, is the total amount of taxes that they're going to pay over the years on those required minimum distributions. Now, assuming they didn't need the money gets reinvested, there's another $200,000 that gets paid on reinvested dollars. But if you spent that money and took that $2 million off, when you die, that account balance is still subject to taxes to your beneficiary. So that's another $659,000. So the total tax paid doing it the government's way is over $1.6 million. Take out the $200,000, it's still 1.4. Now, the chart on the right shows that we reallocated over a 5-year period of time to a tax-free option. It could be a Roth conversion. It could be just taking the money out, paying the tax, and putting it in cash value life insurance. Let's just assume a Roth conversion. The total taxes paid over 5 years is $442,800. There are no taxes paid any longer on the growth of that Roth IRA because it's tax-free. And when you pass away, that Roth IRA is 100% tax-free to your family. And so what you need to realize now is that the total taxes that you pay on the scenario on the right was $442,800. Now, I want you to come back to this chart for just a second. The choice on the right is doing the Roth conversion. Yes, it means writing a check to the IRS, and nobody likes writing a check to the IRS. I get it. But ask yourself this question. Would you rather write a total amount of checks to the IRS to the tune of $442,800 or 1.4 or 1.6 million doing it the required minimum distribution way?
And I know you have had the ability and the opportunity to share that chart and to work through these real life examples with so many folks who have come in to meet with you. Does anything stand out of a recent story? I know you do this day in and day out for folks to show the difference.
The biggest thing, I think, is when they see that there's still money due when they die.
Right.
That's a shock, but it shouldn't be. That account, you cannot get that money out of the account without it passing through the IRS's hands. So the quicker we can get it out. I like to say the number on the right, 442,000, is like ripping off a Band-Aid. It's gonna hurt. Writing checks is painful to the IRS. I get it. But the other option is death by 1,000 paper cuts.
Right. Literally, that's the aggressive.
Right?
Cue the Taylor Swift song, right?
Listen, if you would like to have your own personal tax burden analysis run, please pick up the phone and give us a call. We want to give you our complimentary retirement roadmap. But one of the pieces of that roadmap is the tax burden analysis. Let's look at all of your qualified accounts and understand, if you choose to do it the RMD way, what your total tax burden would be, and if doing Roth conversions or converting those dollars to tax-free assets would be beneficial so that you pay the government the smallest check legally possible. Look, we want you to have the best retirement that you can have. So take the time now so that we can learn exactly what opportunities are available. I also want to note that if you pick up the phone and call us and we sit down and we do a review with you and you are doing everything right, you have all of the tax-free assets that you need, you have all of your Social Security maximized, you have plenty of money to guarantee your retirement, we are going to tell you congratulations. You can move forward with confidence. But if there's one piece of your retirement that needs to be altered so that you can have ultimate success, wouldn't it be worth 45 minutes of your time? We just want to help you succeed.
Sam, Karen, thank you so much. To our viewers at home, we encourage you, this is the opportunity. Don't wait. Wouldn't you want to know today if there's something that you can tweak in your plan to make sure that you are on track to reach your retirement goals? That number to call to receive your complimentary retirement roadmap, and as Sam so eloquently just shared, your tax burden analysis, it's there on the bottom of your screen. All you need to do is call 855-348-3073. Or again, you're also welcome to take out your smartphone and scan that QR code, and that will get you connected as well. Stay with us. We've got more to cover on this important subject of taxes and your retirement right after this.